So welcome to this afternoon to the joint event between the Alliance Manchester Business School and also the Institute of Chartered Accountants in England and Wales, which we all call ICEAW. So I'm Rod Sellers, I'm President of the District Society here in Manchester of the ICEAW. And my co-host is Chris Humphrey, who's trying to remain unseen. But Chris is Professor of Accounting at AMBS, which is within the University of Manchester. So between us, over a game of golf, we decided to organise an event to find out what's really going on in the world of finance. And we really want this to be, or we're planning this to be an annual event where we can discuss significant developments in the accounting and financial world, and especially their relevance to all of us here in the Northwest. There's too much that happens down in London with respect to my London colleagues, and this is our chance to have a voice for what we in the Northwest believe are developing regulations and how they affect businesses that we're all involved in. So today, we're looking at disruption in the world of audit. And that's in response to the many financial scandals that have occurred, not just in the UK, worldwide, we're not the only ones. And in the last few years, the government has undertaken a white paper on this subject, which in fact, Lord Callanan, who is looking here, he'll get a bit bigger in time, but at the moment he's just a small one. He came on a virtual one with Manchester about 15 months ago to introduce the white paper. And since then, there's been lots of consultation, there've been loads of reviews, Kingman, Bryden, you name it. And they came up in May with an update with its on paper in restoring trust in audit and corporate governance. Well, that's quite a challenge, I reckon, but there we go. And in July, both the Financial Reporting Council, the FRC, and the ICEAW gave their response to the government paper. And we're very pleased to welcome, therefore, speakers from the Business Minister, an FRC Director, and our own President. We couldn't have gone any higher to get the appropriate people to deal with this topic. So welcome to all three of you. The eagle-eyed of you will have noticed that our two London friends are speaking from London. There's been a lot of disruption on diaries in the last few weeks with the funeral, etc. And so much as Lord Callanan and his colleagues would want to come to Manchester, I mean, who wouldn't? The sun's shining brightly. Just make sure you recognise that. Unfortunately, we're having to do it online, but they're online and they're going to be able to speak to us about their views on the topic, and then take a few questions themselves before we revert to Julia, our Institute President, who will deal with Q&A together with some other colleagues in the second part of the session. So the overall objective today is to reflect the views of the business and financial community in the Northwest, the effects of the proposals which have been hammered out over these many years, and the implications for our profession, for the professional firms, for members in industry and commerce, and for members entering the auditing profession. That's why we from the ICEAW here in Manchester have got strong links with the three main Manchester universities, the University of Manchester, Manchester Met, and also the University of Salford, because we see our role to help to develop a better understanding of the potential for young people to enter our profession, which some of us have enjoyed over the years, and we're keen to develop it as an interesting profession for the younger people coming through. So at the end of this session, we're going to submit some written comments back to the Minister on what arises from our meeting. Constructive comments is the word I'm using. I'm sure you're all going to be very constructive. So we can move to Lord Callanan. I think you were in it, yes? Get another screen. Lord Callanan was an MEP from 1999 to 2014, when he was created a wife peer. He has held various roles in government, taking on his present role as Under Secretary of State at BEIS, which you all know is the Department for Business, Energy and Industrial Strategy. It changed its name, doesn't it, every few years, I think, that department. So that's the name at the moment. He went to this role in February 2020, and his responsibilities as Minister for Business, Energy and Corporate Responsibility include audit, including the FRC, and corporate governance and responsibility. Just the man to tell us all about the government proposals. So, Lord Callanan, over to you.
Well, thank you very much indeed, Rod, for that fantastic introduction. And thanks to the ICEAW and Manchester Business School for the kind invitation. As you said, I'm addressing you from London because I have to be in the House of Lords for various questions and business that I'm taking through today, but I can assure you I'd much rather be up in Manchester. It's always good to be out in the regions. I myself is from the northeast, and I'm very keen that we do less in London and more across the country. And I can assure you, in my responsibilities, I'm endeavouring to make sure that as much of that happens as possible, shifting civil servants and agencies out of London and up into the region. So it's a pleasure to speak to so many people from across the Manchester and the wider Northwest accounting profession and business community, and from the business school itself. Bringing these voices together is a great opportunity for you to connect, reflect on the impact and the contribution that you make to the British economy. This is a community that's harnessed the strengths of the city and the region to drive many key moments in British history, from being the world's first industrial city to being the home of the team that first isolated graphene. And it's partly this combination of scientific innovation and business ambition that has established this area as so important to driving growth and prosperity across our country. Now, I can see you're saying, well, what's that got to do with audit reform? Well, actually, more than you think, because ultimately, one of the aims of our proposed audit reforms is to build up the economy up in Manchester and across most of the rest of the UK. We want to see businesses thrive across the whole of the country. To support business growth, it is vital that investors, that financial markets, and all those who depend on the largest companies in the UK have access to reliable data. So I'm going to talk about three main problems today. Why there is a problem with trust in corporate reporting, what the government proposes to do about it, and of course, what that means for you. So firstly, why is there a problem? Transparency and good governance underpin a vibrant modern economy. To strengthen our position as a world-class destination for investment, it is vital that our leading companies command the confidence of financial markets and, of course, from the investment community. The UK has had a strong record on corporate governance. However, there have been some major failures of companies like Carillion, like BHS, and that have highlighted some of the shortcomings that have been confirmed in the independent reviews that Rod referred to by Sir John Kingman, by Sir Donald Bryden, and by the Competition and Markets Authority, the CMA. So what are we proposing to do about these problems? Now, many of you will have seen that in May, the government published its formal response to our consultation on the way forward, responding to the many views shared with us by businesses, by financial professionals, by academics and others in over 600 formal submissions that we received. And of course, I'm grateful to the ICEAW for your input into the reforms, both in writing and in convening the numerous meetings during the consultation period at both national and regional levels. And Rod referred to one of them that I attended in Manchester. And of course, to everybody who contributed views by whatever means. Now, we did listen carefully to the responses, and we shaped what I think is a balanced and proportionate package of reforms to restore trust in the system. We recognise that addressing trust means action across the whole of the system in auditors, accountants, directors, and investors. So with what we think is a holistic and proportionate reform package, investors can continue to invest confidently in UK companies, and businesses will be incentivised to work transparently and with appropriate resilience. So the government will propose to establish a new, stronger audit regulator, which will be the Audit Reporting and Governance Authority, or Arga, as it will become known, to drive improvements in the quality and usefulness of audit. Large companies reporting will have to be more informative, and we're tackling the dominance of the big four audit firms in the FTSE 350, which, in my view, is constraining competition, choice, and resilience. Arga will have clear and focused objectives with tougher enforcement powers, Directors at the biggest companies who breach their reporting and audit duties will face sanctions, including fines. And these companies are of huge importance to the economy and to society. So where their directors behave irresponsibly, and of course it's a small minority, it's right that they are held accountable for that. It's a prod in the back for that very small minority of big companies and directors who actually need to pay more attention to governance and transparency. Large companies will have to publish information about the risks that they face, the steps that they've taken to prevent fraud, and transparency around their realized profits and losses. We need to be sure that our largest companies are not going to dish out, on the one hand, huge dividends or bonuses, whilst on the other being on the brink of collapse. And a number of reforms will be taken forward through the UK's Corporate Governance Code, including strengthening boardroom focus on effective internal control processes. The code provides a robust way of testing and refining an approach, leaving space for companies to apply it flexibly if necessary. It does not rule out potentially making it a stronger legal requirement at a future point if required, or potentially extending it to a wider range of companies. Corporate scandals have shown that action is needed. This is, if anything, more important when we're facing economic headwinds. But we understand the serious difficulties that businesses are facing, and we don't intend to add to those difficulties. We have consciously reduced the cost to business in the final package of reforms as compared with last year's white paper. For example, in arriving at the new size threshold for private companies to be treated as public interest entities or PIs, we have balanced the need to regulate the most economically important companies with the obvious need not to place excessive regulation on smaller businesses. The UK is rightly recognised as a global leader in audit and corporate governance, but we don't remain a leader just by standing still. A strengthened regulator provides clarity for everyone in the system with clear accountability. By strengthening how our largest companies are run and audited, we are ensuring that investors can invest here with even greater confidence. It should ultimately decrease the cost of capital for well-run companies and reduce the number and likely costs of unexpected catastrophic corporate failures, making the UK an even better place to do business. So to answer my third question, what does all this mean for you? Business leaders play a critical role in the economy. As our innovators and our wealth creators, you drive economic growth. Accounting and audit professionals are a valued part of the safeguards and system of corporate reporting, and the professional bodies have a key part to play in driving that progress. Where the Brighton Review found scope for a shift in the mindset of audit, professional bodies are well placed to rise to that challenge. For example, through further development and training and qualifications. This is a profession that excels at evolving and innovating to meet the needs of times. So I'm grateful for the work that you already do and have done to advance reform, and I thank you in advance for all the steps that I'm sure you'll be taking, leading to the change that we need to see. Now, we're all feeling the impacts of the war in Ukraine and the cost of living crisis. These are significant challenges for the country and indeed for government. Attracting investment is crucial to our long-term solution to grow the economy, to address the cost of living and get people into good, well-paid jobs. We have a clear plan for growth underpinned by our investments in infrastructure, in innovation, and in skills. The reforms to restore trust in the system are part of this, and your role in that is crucial. Together, our actions will strengthen the UK's reputation as a great place to do business and a world-leading investment destination. Thank you very much indeed for listening.
Thank you, Lord Colin. A very, very thoughtful presentation. We'll pick up later with any questions for that, but can I at this stage ask our second speaker, Miranda Craig? You may have noticed we had said it was going to be Kate O'Neill, but Kate wasn't available at the last minute, and Miranda's stepped into the breach on behalf of the FRC, so it's become the Arga. Miranda is Director of Strategy and Change at the FRC. She first qualified with Ernst & Young and has held many senior posts in industry in the city. But in 2019, she was seconded to the BEIS department to work with the Bryden Review, which also was where Chris Humphrey was an advisor. So we've got all the best people in the room here. And if you've got any problems about what's happening in Bryden, those are the two people. Oh, well, sorry, what's that? I'll leave it to you. So Miranda now joined the FRC a couple of years ago and is responsible for delivering the transformation program. So Miranda, good to hear from you.
Thank you, Ed. And I would say the same as Lord Callan, and I'm very sad I couldn't be with you in Manchester. As Chris will testify, I would never miss an opportunity to visit the city of my grandparents, and when there were wine and canapes on offer as well, I'm all the more gutted, but next time. So we've got 10 minutes that I've been allotted, and I'll do my absolute best to stick to that. It would be absolutely impossible to cover everything we've done recently and everything we're planning to do in 10 minutes. So I'll just touch briefly on some of the topics I think are probably of most interest to this audience, but I'm happy to take questions on anything I haven't covered in the Q&A. So first, the big one, the transition to Arga and the timing of that, and obviously in the hands of my the Right Honourable Minister there, well, or the government as a whole, as to the legislative timetable. We're very keen, I think, as many people are, to see primary legislation, and a lot of what was set out in the government response can only be fully realised with that primary legislation. At the moment, we're sort of working towards an assumption that we will become Arga in 2024, but that is very much, again, in the hands of the ultimately of the timetable. So I'm not going to cover in any detail at all any of the elements of the policy in the government response that can only really truly be delivered with primary legislation. So that would include the detail of directors' enforcement, managed shared audit, or accountancy oversight, which I'm sure are of great interest, but not knowing yet exactly how we're going to be asked to deliver that, it wouldn't be fair to talk about the detail at this stage. However, what we have done, and hopefully some in the audience have seen this, in July we published a position paper, which was our sort of opportunity to set out the steps that we can take to continue laying those foundations towards the point in time when we become Arga. And we thought that that was a useful thing to do, to help set out a roadmap for all of our stakeholders to try and understand, well, when and where might they want to engage with us on developments, lots of consultations for us to do, lots of new functions, new powers for us to think about how we're going to operationalize that. And with that volume and that complexity within a constantly moving system, we thought it would be useful to help people understand where we were going to focus our time over the next 12 to 18 months. Now, I imagine that this group, this audience, is particularly interested in audit, and I'll come on to sort of implications for the profession. In the policy, in the position paper, sorry, we talked quite a bit about the work that we continue to do in our audit standard setting remit. So audit's one of the areas where we already have strong statutory powers. We are the competent authority for all of audit. We delegate a number of our obligations as that primary regulator to close supervisory bodies like ICEAW, and then we oversee how they regulate those activities in the rest of the audit market. But we also, as you know, set the UK standards, the ICEAWs for audit, and they are a more powerful mechanism than I think some people would give them credit for helping us improve audit. So both the quality of the audit product itself and the quality of the audit report. And recently we have published a set of 6 snapshots of auditor reporting taken from a sample of over 400 FTSE 350 and large AIM companies, and really just to start a dialogue to help us to understand what are people's views on the quality and the informativeness, the usability of auditor reporting across 6 themes. They're really worth a look if you're into that kind of thing, which I imagine this audience is. And what that really is about is to help us understand when we come to revise the suite of ICEAWs that relate specifically to what should be contained within the audit report and how that is as clear, concise and accessible as it possibly can be, that we're doing that from a strong evidence base of research of what's out there now in terms of good practice. And we've taken into account all of the possible suggestions we could have about innovation and changes to the standards that will allow us to improve them going forward. So we are currently having that dialogue now. We're having roundtables and webinars, etc. Hopefully some people have participated in those, but do keep an eye out for more on that topic. And if you're not already, this is a plug, by the way, that Kate required that I stick in, but if you're not already a subscriber to FRC news updates and publications, then you can do that on our website, frc.org.uk, and you will never ever miss any of our interesting pronouncements. So just moving on from audit for a moment, for those who are sort of interested as preparers of accounts or service providers to public interest entities or listed companies generally, we've also got some quite interesting changes to the revisions to the Corporate Governance Code coming up next year. As Lord Callanan intimated, a lot of what's in the government response will be implemented by us through those means. And then there are at least 4 reasonably significant corporate reporting changes coming down the line: the resilience statement, the audit and assurance policy, new reporting on directors' obligations in relation to fraud, and distributed reserves disclosures as well, capital maintenance stuff. So there's a lot there for stakeholders to get to grips with and understand. What does that all mean for the profession, though? So I imagine for those of you who are students who are thinking about getting into the profession, or for those of you who are here today who are members of the profession, there is a lot to think about, and we as regulator are really quite cognizant of that. If you followed any of our recent reports on our 3-year plan, you'll see that we've published a visual of our 4 phases of regulation, which includes system partner, facilitator, supervisor, and enforcer. Now, the first 3 of those can be looked through the lens of an improvement regulator, which we talk about a lot. We also get asked about a lot, and I'm fully expecting some questions on what that actually means. We have 5 objectives about improving the quality of reporting, about innovation, about influence, etc., about competition and choice. Being an improvement regulator for us is not about going soft on the enforcement side, because although you might see that in the press an awful lot, it's actually a relatively small part of what we do. And what we're certainly not about as a regulator is setting a bar and then watching everybody smack right into it so that we can enforce against them for failing to meet our expectations. We've got an obligation as a regulator to be clear, to be transparent, to be accountable, to be proportionate. And we need to ensure that when we set an expectation, that for those we regulate, they can really clearly understand how are they expected to meet that. What is that going to look like for them? And different size firms face different challenges in meeting those expectations. We're very confident that the smaller firms, tier two and downwards, don't have the access, the resources, the facilities of their big 4 peers. So, you know, in that sense, we've been actively really considering quite deeply lately, how do we support our competition and choice and resilience in the market objectives by supporting, in particular, smaller firms to better be able to firstly enter the pie market, stay in the pie market, meet our quality expectations in respect of audit. And to facilitate that, we've got several sort of initiatives that are on the boil at the moment, which I can speak very briefly about. So we've got the Audit Sandbox, that's on the policy standard setting side of the house, which is really just an exercise to provide a safe regulatory space for firms of any size really, but with a focus on supporting the smaller ones with fewer resources, to understand how best to interpret and implement the standards. And it's a win-win for both parties, because it allows those firms to sort of better use the knowledge of a wider group without sort of necessarily butting up against competition issues. It also allows us to understand what are the barriers for those firms that they face when they're interpreting the standard or implementing the standard, and this applies to the quality management standards as well as the ICEAWs. So that when we come back round to the next set of revising those standards, we can really think, okay, well, how can we write this in a way that's just, it's naturally going to be easier to interpret and implement. On the other side of the house, on the supervision side, very conscious there's a perception of a cliff edge between the regulation that firms receive when they are being overseen by a professional body like ICEAW versus when they're being supervised directly by us, and that can be off-putting and a reason for smaller firms not to want to scale and grow. And we want them to scale and grow because we want that competition, want that choice, and ultimately we want that resilience in the market. So we have a concept of an audit scale box, which is sort of a twinkle in the eye of our executive at the moment, but it's very much looking at how can we support those smaller firms to really understand what would it feel like to grow up into one of those higher tiers. What would the supervision feel like? What would the audit quality review feel like? All of that kind of stuff to help them make those decisions about do they want to be in that space and what kind of investment would they need to make to be in that space. So listen out for more on that soon. And then separately, and this will kind of bring me a bit onto the attractiveness of the profession, which I know is of great interest and very relevant for many at the moment as well. We're doing a lot of work with ICEAW and others on the quality of auditor education. So this was specifically in relation to the Bryden recommendations about ensuring that not only that the audit qualification that students may be taking, but also the continuing professional development that members of the profession are receiving is really, really gold standard, and ensuring that the profession is on a solid footing, particularly with a focus on fraud and professional skepticism, which are two areas that we consistently find sort of lower quality audit issues when we're conducting our audit quality reviews. And that's particularly important to us because, contrary to popular opinion, we're not actually, we as a regulator have absolutely zero interest in the audit profession not being seen as attractive. So, within the system, it is in our interest as a regulator for that profession to be strong, to be credible, good pipeline of quality candidates. I mean, quite frankly, if that's where we can get to, that's less work for us. It doesn't mean that we go soft. It doesn't mean that we set lower expectations for smaller firms. It doesn't mean that we say, oh, okay, you know what, you're having a tough time, we'll go easy on you. What it does mean is that, we have a vested interest in there being a profession that's held to high standards. It's one of the features of a well-regarded profession. And in our view, regulatory risk can't be the primary factor creating issues for the attractiveness of the profession right now. But we absolutely don't want to be a factor in making it less attractive. How we do that and how we balance that with being a strong and credible regulator, whilst at the same time encouraging and supporting the market, particularly in the smaller firms, to grow, and ensuring that audit is perceived as the vastly important public interest service that it is. That's very much top of mind for myself and my fellow executives at the FRC currently. So I think that was just about 10 minutes, so I'll leave it there.
Thank you very much, Miranda. Well, a lot of information for everyone to take in from that. We're going to take a few questions now for the Minister and for Miranda. They've got to go on for other meetings. Something about going to the House of Lords, I don't understand that, but I'd go as far better. There we go. If you must go, sir, and do so. Got a few questions being sent in to me, so it may look a bit staged, this, which it is. But Chris has got one first question to ask the Minister.
Yes, thanks, Rod. Yes, look, Alan, the white paper, as Rod emphasises, titled "Restoring Trust," about restoring confidence in the auditing profession and governance, etc. Restoration in itself is a sort of limited objective. So you hinted in your speech as well that you were looking for innovation and development, both on the part of the FRC and the profession. If you look at reforms in the past, we have been in many times before in the aftermath of scandals where we have tried to restore trust and confidence in the auditing profession. What are the game changers this time round? What will it sort of deliver in a sense, so we're not going to be back here in 5 years' time discussing the same issues? And if you had to highlight, particularly at these times of enhanced financial instability and political conflict around the world, where would you like to see innovation and development happening conceptually in terms of the auditing function?
Okay, that's a good question. I think ultimately I think the major changes that I think this will bring about, the two structural changes, which are, of course, shared joint audits and splitting audit from consultancy, I think will help to improve the quality. And the point of managed shared audit or appointing a challenger firm is to build resilience and choice in the audit market. I'm a great believer in competition and choice. So, and we're looking hard to make sure that it doesn't compromise audit quality. Operational separation is already being done on a voluntary basis by some of the largest firms. So its impact should be starting to work its way through the system soon, if it isn't already. And I think that will help to ensure that audit partners' incentives are to focus on quality above all else. So I think they're the two major changes that I would pick. I mean, I think the reforms need to be looked at not as a sort of big bang, but as something that are going to be rolled out gradually over time. It will take a number of years for all of the impacts to be felt. And the other major change, of course, is the strengthening of the FRC, or Arga, as it will become, to provide more and hopefully better regulation of the profession.
Thank you.
On the issue of innovation, why did it say?
Apparently, you wanted another answer.
Just on the issue of innovation, where do you think audit itself needs to develop, rather than just doing more of the same? Where do you think the capacity lies mostly for development of that function?
I mean, I think eventually there would be, I think, moving away from purely financial reporting into more, social, environmental, governance, etc. So many companies, and this will take many years to roll out. I'm certainly not saying this will happen immediately, but companies will be reporting on, things like climate risks, more sort of social, environmental, biodiversity risks, etc. And of course, ultimately, it's fine to get them to report on it, but there needs to be some sort of quality assurance, some monitoring of the reporting that they're doing to make sure that it's consistent, that it's reliable, and it's accurate. So I think eventually the audit profession will probably move more in that direction.
Thank you. I had a question in from a partner in a mid-sized firm in Manchester, who unfortunately couldn't be with us today, but it's for the FRC, it's his former under, regarding the comment you made, Miranda, on the improvement regulator. This is something which Jan de Plessis, when he was going for interviews for the appointment, there's great emphasis on it. The person asked this question doesn't see that there's been much improvement over the years in the way the regulator, the FRC, has dealt with it. How can you move the agenda, the method by which the FRC operates, or Arga in future, so there is real improvement? At the moment, we seem to get a lopsided media response. We get a lot of negatives in the press. I mean, it's an easy topic just to decry the fines and everything else that happened to the companies that you've investigated. But how can you get a better message over about how you're trying to improve the position of the companies and act in that more positive way as a regulator?
Well, first of all, I'm sorry that your question asker feels that way. We are trying very hard to make sure that across all of our sort of communications, we're emphasising where this improvement regulator facet comes in. I think if you look across, for example, our audit enforcement review, our annual review of all of our enforcement cases and their outcomes, you can see how actually, and I'm sure I'm not alone on this panel in wishing that we could control a bit more how the media portrays some of this stuff, because I wish I could, but they will take what they take as their byline, and that's that. What you'll find is that from our perspective, it's not really about the fines. The fines are a deterrent in a sense, but this is not crime and punishment. This is how can we ensure that we best understand why did that issue arise in the first place? There's a lot of focus now on our constructive engagement processes. So a lot of stuff doesn't even make it to the pointy end of an enforcement tribunal, because it's being looked at through constructive enforcement, constructive engagement. Sorry, there's a sort of collaborative approach with the firm or the individuals or the company that is the subject of the case, and we're doing work to understand how can we stop that from happening again. Is there Is there an issue with our supervisory approach? Is there an issue with the standards? You know, are they too complicated? Is there an issue in the quality of the firm and the individuals they're training? And we go, you know, what you often don't see unless you dig down into some of those enforcement publications is exactly what we've put in place with the firms and the individuals, you know, after you get past the fine that we might have given them, to really help improve. And I think that information is far richer and far more useful to the profession as a whole to understand, well, where are mistakes being made, and do we have that risk in our firm, etc., etc. I would like it if there could be far more media focus on that than on, you know, whoever got fined £12 million, or yeah, but we are where we are. In the supervisory space, we have a lot of work going on with our new supervisor model. So this is direct supervision, individual named supervisors, very clear audit quality improvement plans, very much closer work with audit committee chairs to help them understand, what do we mean when we say audit quality? How would we expect them to be able to measure and understand how to assess audit quality in the tender process, for example, how to question and challenge their audit partner on how they're delivering quality. So all aspects of the system, as Lord Callan said, this is holistic. This is a whole system approach, and you cannot move that Texas-sized tanker in the space of, you know, of a minute.
Okay, well, we're doing our bit to try and get the other side of the coin onto the media. So, yes, sir.
Rod, can I please just intervene to say that my apologies, but I need to leave. I've got to go and do a statutory instrument committee in the Lords. I'm going to have to leave you. So thank you very much indeed for your attention.
Very quick question. The new government are talking about less regulation in a lot of areas. Do you think, under the Liz and Quadri approach, do you think there will be a rethink of the level of regulation that is inherent in the proposals? Is that something that's likely to be under review in the next year or so?
I mean, we always keep these things under review, but you know, this process has been through a lot of iterations. We adapted the proposals from the 2021 white paper when we responded to the consultation. We're definitely going to keep looking for any pro-growth deregulatory changes, and indeed we announced alongside the publication in May that we will be reviewing all non-financial reporting requirements, but I don't think that necessarily implies major revisions of these plans. So we are definitely proceeding with drawing up the legislation, and I'm hoping to get a parliamentary slot to introduce it.
Thank you very much for your contribution.
My apologies that I have to rush off, but thank you very much indeed. It's been a pleasure to be with you.
Right, I think we might just have a couple of other questions for you. Are you still there? Yes. Well done, Miranda. Michael, a comment to us.
Yeah, mention's already been made of the media coverage and the high profile of fines of auditors where there have been audit failures. But most of these failures follow corporate failure. And it seems to me that in those cases, whilst the high profile is the audit failure, the directors who are predominantly the cause of the audit failure, of the corporate failure, walk away. What are the thoughts about the strengthening of the accountability of directors, particularly of PI companies?
Yes, exactly. And this is a massive gap that Kingman identified and that we're really, really keen to close as quickly as possible. Because you're absolutely right. You know, we have much more purchase, much more ability to enforce against auditors for breach of relevant requirements, e.g. failing to follow the ICEAW or the ethical standard in more cases than not. And we have that also through contractual arrangements over accountants. So if you are a member of a board, a public interest entity board who happens to be a member of an accountancy, chartered accountancy body or an auditor, then we can bring enforcement proceedings against you. If you are a director who has resigned their membership of said body or never was a member of a profession that we have enforcement powers over, then yeah, we have nothing. We have no ability, even if we had evidence to support an enforcement case, that we have no powers to do that. And that's why I was very pleased to hear Lord Callanan sort of recommit there to the elements of this reform programme that deal with ensuring that those directors are accountable in the very, very rare circumstances where they are not taking their duties seriously. And we're talking here about existing duties, right? It's not anything new. It's just what you're supposed to be doing anyway as a statutory director of, you know, huge, absolutely enormous companies. And so we should be able to hold them to account. And that would be a civil regime. It's not a criminal one. So, you know, the existing sanctions for breach of directors' duties in the Companies Act are criminal penalties for the most part. This is a civil regime, as it is with audit and accountancy, you know, designed to ensure that they don't get off scot-free. So the sooner the better, in my view.
Thank you.
Thank you.
We had a couple of other questions which were really for Lord Callanan. So I think we better move on to the next.
Yeah, I can't. I get in serious trouble if I try and talk for the government.
Thank you very much. And next time we'll get you in Manchester. So
yeah, next time.
your contribution. So yeah, well, thank you.
Okay. Am I allowed to drop off now, or do you need me to hang around?
Thank you. Right, let's move on. Julia Penny, our own president here for 22-23 of the Institute. Julia's been involved with the Institute for many years and has served on its council since 2013, as well as chairing currently the Consultative Committee of Accountancy Audits. That sounds quite impressive, doesn't it? She's currently self-employed in her CPD training consultancy, but I really think that with her hectic programme of meetings and especially dinners, both here and overseas, I think she won't have much time to run her own business recently. But we are pleased to welcome you here to Manchester, Julia, and could we ask you to come and give us your thoughts on the process?
Thank you very much, Rod, and thank you for inviting me to Manchester. It is nice. I get to go to London a lot because head office is in London. It's very nice, London. It's a bit anyway, but it's really nice to come to Manchester, and it's really nice because this event fits very nicely with my day job when I do have time to do it. You described it as consultancy because it is, but my background is technical and training in audit, financial reporting and anti-money laundering. So in normal times, I would still be poring over the government white paper, the FRC proposals, and probably spending even more time than I have time this year to do it. But what I want to say, I'm here, you know, as, if you like, I suppose, the face of ICEAW. Not entirely sure that it's possible to do that with just one person, because we are so much more than just whoever stands up at a particular event that you might come to. But I want to go through and pick up some of the points that have been raised here, and also talk a bit about what ICEAW think, are doing, are saying. Now, I'm conscious that some of you, I'm pretty sure, because I've met some of you over coffee, are ICEAW members already. How many people are ICEAW members? Can I? Okay, yeah, quite a lot of you. So welcome, it's lovely to see you. Some of you might be thinking about becoming a member, an accountant, or whatever. Anybody thinking about that as a future career option? Yes, somebody's admitting to it anyway. And obviously we may have other people who are in business and not accountants, because this is about corporate governance, not just about audit reform. Welcome to all of you, and obviously thank you to speakers, because that was a really interesting introduction. Now, obviously the importance of this, as has been said, lies in both the role of audit and the role of corporate governance, because audit usually only goes wrong if actually corporate governance has gone wrong first, hence the question about, well, you know, from a wrapping people over the knuckles point of view, how do we do that if there's nothing for the directors and only the auditors can be wrapped over the knuckle? Or indeed, even if the director is, you know, even as currently, you can take an enforcement action against the director who is a chartered accountant and not against the person sitting next to them, which is not what the Companies Act says at all about responsibilities of directors. Now, we have had some quality issues, clearly, in the UK, but I think many, and I did meet with the chair of the FRC just week before last, and he agreed, I think, as well, that actually audit quality overall in the UK is of a very high standard. But that doesn't mean that it doesn't need to get better still. Because if we are leaders, and I think I'm nicking your Carolan's words now, if we are leaders, you don't stay a leader by standing still. You have to constantly get better. And the Institute very much supports that view. The whole concept of a professional body, of CPD on a lifelong basis, is we are constantly moving, constantly getting better. There is always something new to learn. But of course, it's also important to take us out of our London-centric approach. And the regions, particularly given all of the economic situation that we got at the moment, we have to make the most of the whole country. So making sure that the rules and regulations work, not just in the city of London, not just for huge business based in London, but it works in Manchester, in our other regions, smaller businesses as well as large ones, is absolutely core. So the ICEAW very much support government's ambition to improve quality, but also increase choice in the audit market. It is difficult, and we haven't got the measures like market caps or joint shared managed audits. We haven't got those yet. They're some way off if we do get them. And there's a lot of doubt as to how easy it will be to use those mechanisms to take forward increased capacity. So firms that don't currently do PI, public interest entity, PI audits, being able to get into that space. So I was very interested to hear the comments that Miranda made about the sandboxes that they were creating to provide safe spaces for those firms interested in moving up to that PI audit to find out a bit more, to experiment as to how it would look like, how it would work. Now, the government has put a lot of effort into this. There's been lots of consultation, but we're still going to wait, by the sounds of it, till at least 2024 before we get the legislation. That doesn't mean that we can't do things in the meantime. And the ICAW, the FRC, are still doing things in the meantime. Audit is important. It's important not just for auditors, which obviously it is in a sense. It's important for the economy, it's important for companies. The auditor should be the critical friend, should help to make the company be the best that it can be. Because without good corporate governance, and audit helps to sort of critique, if you like, the way that the company is being run, as well as what's in the actual reporting, without that all working well, we get these disorderly failures, we get things that go wrong. So ICAW is very keen that the government does continue with its timetable. We recognise it's not going to be as quick as we all wanted to start with, but nonetheless, we still think it's important. The FRC still thinks it's important. Lord Callanan said he still thinks it's important that we get the primary legislation as well. But in the meantime, we've got other things going on. For instance, some of you will know about the new quality management standards, ISQM 1 and 2. One of the things within ISQM 1 is about the public interest aspect of audit and promoting and making sure that all of the staff understand that audit is in the public interest. It helps our economies to run effectively, it helps them to grow, it helps them to be well run. And sometimes, if we think about the attractiveness of the profession, we hear, and I'm not a young person, so I can't say whether this is true or not, but we hear that a lot of young people are looking for careers where they see more meaning than just, a good, soft, safe job, and nobody really believes in a job for life anymore, I don't think. So the meaning of audit is that it helps our economies to run well. It helps to create prosperous economies. It will also have to help create sustainable economies, because if we're not sustainable, it's a fact that is good to all of us. But that's a topic for another day. Excuse me. Been talking all day, and this is what happens. My husband will be saying, I've lost my voice by the time I get home. So ISQM 1, the standards, the work that the MRC is doing on altering standards, on trying to make sure that they hit the mark, more on fraud, for instance, in terms of the standard, what you need to do on that. These are things that can go on and should go on, even though we haven't got the legislation yet. And the ICAW Provides lots of guidance for firms, for instance, on how to implement the quality management standards, on how to look at quality from a cultural point of view. Because ultimately, we're going to have quality because we all believe that we need to have that. We all try our hardest. We have the education and the CPD to make sure that we can do that. The new regulator, the ICEAW, wants to see Arga created for the reasons that Miranda explained when she was talking. But we'd also like to see more emphasis on internal controls. We haven't got the SOX light that was earlier on being proposed, the internal controls regime along the lines of what we have in the US, for those who have come across that physiology. However, we have maybe got a changing environment. Companies that aren't doing enough on their internal controls are starting to find, I think, that their auditors are getting a bit sniffy about it. And a bit, well, your internal controls don't look good enough. I don't know if I want to audit you anymore. Professional bodies are starting to emphasize more and more that internal controls are vital. And let's face it, lots of the professional body members work in business, not as auditors. So they've got a direct role there in making sure that we have good internal controls. So there's a lot that can be done without legislation. And as Miranda said, we're going to get new corporate governance codes next year, thereabouts. And there's likely to be more emphasis on the requirements for internal controls. So we might start to balance things up. We've got work on improving audit quality, and we've got work on improving governance via stronger internal controls. And the Institute is very much behind those sorts of changes. We would welcome further detail on market opening that were mentioned earlier. So whether we're going to have managed shared audits, how that could work. And it's a little bit way off. Miranda rightly probably said that you can't really comment on something that is so far in the distance. The regulatory environment, though, does create at the moment a bit of a cliff edge in terms of I audit pies, public interest, or I don't. And I'm in FRC scope or I'm not. So I think we would welcome the proposals that the FRC are talking about, that space to understand how that works and for them to see if there's anything that can be done to ease it. FRC regulation is very much time consuming than ICEAW regulation because it is designed to deal with the riskiest of companies in our economies. It needs to be proportionate, and we need to work out how we can get firms to be able to step up to that high audit so that we have more choice in the market, because that also gives us more resilience in the market and a stronger audit profession. And we also need to make sure that audit is attractive to the next generation, because actually it is. Not only have we got a profession which is hugely interesting, don't believe those Monty Python sketches that you've seen on TikTok recently. It is hugely interesting, it's fascinating, it's vitally important for the economy. All you have to do is to look at countries that don't have a good audit across the country to understand the impact that good audit has. So it is a great profession for young people to come into and for the rest of us to stay in if we're in there already. But it needs to move with the time. Technology is increasingly impacting it. Don't believe it when you see sort of Google adverts for jobs and think that things like that are the only ones with technology. All companies have technology with it. Audit has a ton of technology within what it does. And the Institute is doing lots to make sure that members that perhaps missed that whole digital bit when they started out can top up their understanding, their abilities as they go through their career. So we have got some issues. We do want to improve quality. The ICEAW strongly supports the government's steps in moving forward. Don't want delay really, but there's lots that we can do as a professional body in the meantime, and there's a lot that we can do as members in the meantime in just raising quality and talking to companies about how they improve trust in their own businesses. Volatility that we've got in the economy at the moment only highlights the need for this. It's not something to push under the carpet because we've got other things to worry about. Even more important when you've got volatility, because more companies are likely to struggle when you've got economic situations such as we have now. Thank you very much. We're going now to have some
Questions, right, thank you. If you want to go and do the Dave Allen job and sit on one of those high stools.
And
You remember Dave Allen? He has a glass of water and a fag in his hand. We couldn't find any fags for him. Chris is going to take over and lead the questioning now.
get up.
Yeah, thanks very much, Julia. What we thought we'd do for the last part of the session is just try and make sure that we deliver in terms of Rod's perspective of getting the regional voice prominent. So what we thought we'd do, following on from the formal speeches and presentations, is just to get a view from a representative set of the Manchester professional accounting community. So we've got Graham and Maria, Graham Rigby from Assets and Maria Hallows from Beaver and Struthers, and they're both in their positions at sort of executive partner level, you know, running large chunks of their organizations. And it was interesting looking at their profiles that both of them emphasize the importance of working well with clients and the impact that they have as firms and respective partners on their clients and that interaction. So I just thought as a, you know, to get an initial response or reaction about, you know, what does it feel like on the ground in terms of the current environment, and you know, what do you see from these sort of proposals and reforms, what impact they're going to have on them?
Yeah, thank you. My name's Graham Rigby. I'm the regional managing partner for Assets, which is a top 10 accountancy firm. And you're right, we do focus a lot on our relationships with clients. We recognise that as a business ourselves, we're in a very privileged position being auditors to small, medium-sized enterprises, are the bedrock of the UK economy. And it's really important that we maintain that relationship with them. We have a robust approach, so we need to be auditors, we need to be regulated, and we need to be the regulators, but also we need to build that relationship because we have a unique position to be able to assist our clients as well with their business and with their future.
Hi, I'm Maria Hallows. So my role within our practice, although our practice is very similar to Graham's in terms of the services that we provide and the clients we work with, we're quite unusual. So we're one of those smaller firms, we're around 200 people, that is in the PI regime. So we fall under the FRC regulation. And you may all want to ask the question why, because I ask myself that question quite a lot. But we are unusual in that sense, and I see the impact of falling into that regulation from 2016 on my clients and the audit they receive, the relationship I have with them, and it fits very neatly with this point about how can we help our clients. And clearly I am much less able to help my clients because I have a much different ethical standard to work towards under those PI rules. And it's much more difficult for me to provide them with anything useful other than that statutory audit, which they have to have. So it's a different regime altogether for me, really, and the regulation is very different.
Greg, what do you pick up from the younger generation in terms of the? I mean, we've heard various comments about the relative attractiveness, but what does it feel like?
Yeah, it's interesting. One of the quotes that I lifted from one of the FRC reform reviews was to make sure that the accountancy profession and auditors in particular pick out the best and the brightest talent, and it's challenging at the best of times. We're in a situation now where there's a scarcity of resource across all sectors, and audit is no different from that. To the extent where we're taking a view of taking on many graduates with a view to training them within the organisation. We've even taken the opposite end, a view from the opposite end of the scale, to try and encourage people who recently retired from the profession back into the profession, because we recognise that they have skills still to bring at a time when resource is quite scarce. So yeah, there are a few of the things that we have.
Can I just ask you a general question to the three of you, really? I mean, there's a lot of talk in the sense of the scale of reform, the scale of changes that are going to be delivered, and at the same stage, we talk about the UK being a leader in this field. So it's just a sort of inherent puzzle to me is, I mean, do leaders spend this amount of time regulating?
Do they, or do they have to?
Yeah.
Yes. I mean, I think with any complex change, like you say, with a lot in the package, my experience of all of these sorts of processes is they do take a long time because there's a lot of debate and a lot of people want to put their views in there, but don't agree, and therefore there's quite a lot of time sort of smoothing the edges and working out where there is a path that might roughly allow everybody to come together on that path. And I've seen it with other decisions as well, where you've got complex things and lots of disagreements. You have to just sort of funnel it down. And so I mean, I haven't got the direct experience of other regimes, but I've seen it with other sorts of areas of complexity. And it just seems to take time to debate and thrash it out and narrow it down.
Okay, can I move on to?
Yeah, just before we do, just say, if you have a question online, please post it and we will pick it up and through various mechanisms ask it. If there's anybody in the room who's got a question, just put the hands up and we'll come to you.
Right, can I first of all ask Bhuwana Gupta? Bhuwana is an MMU student who we're working with from ICEAW. Bhuwana, you've got something on the role of the accountant.
Yeah, I have a question on the role of accountant in the corporate social responsibility assurance. My question is, what is the potential role and scope of professional accountants in this area in comparison to the non-professional accountants like the engineers or the technicians in that field? And also, whether this audit, CSR audit, is it similar to the financial audit, and should there be an integrated report, or both should be separate and separately delivered?
So it's a question on the role of sustainability, ESG type assurance, and also picking up on your point, Julia, about the accountants actually finding problems in the businesses when they're acting as auditors that actually help to prevent a failure. So how far do you see the scope of auditing accountant developing that?
Can I start off
Yeah.
on that, then you've got more thinking time. I think this is an area that we've been thinking about actually quite a lot, because we can see that other professions could easily go into that. So, as you say, engineers, and they do, you say, well, I can learn those things because it's new for all of us. None of us have done this before. However, we do also think that the skills that an accountant and an auditor in particular has in terms of assuring information are very transferable skills. And if you say, well, okay, now what I want you to assure is CO2 equivalent emissions, then you can learn, okay, this is what they're supposed to be reporting, this is what they've done, what is the evidence, and you can use the same auditing skills that you've learned to do that. So we think it's very much in the space for auditors of an accounting background, accounting professionals, to take that work. However, it's also very much at risk, if you like, for somebody else to steal a march on us if we are not quick enough to act and move into that space with the appropriate education and products.
I think we already have a role, don't we, if those disclosures are made in the front end of the accounts. So clearly auditors have a role around the board report, the narrative reporting in any set of accounts. And I find with my clients who are often quite proud of what they're doing around corporate social responsibility and ESG and value for money and lots of other things, are very keen to put quite a lot about that in the front end of their accounts, and therefore we have a role in that already when we sign an audit report. And then I think beyond that, moving on to almost a separate role, and whether we think that we might have a job to do there. I think yes, we already sign other forms of assurance, do we? Lots of them, bank confirmations, all sorts of things, which are not audited accounts. And it's all about making sure that both sides of that relationship, so the client and us, are just very clear about what the scope is, what the responsibility is, whose responsibility it is, and what the report means and what value it has. And I would really not be a fan if we move down that road of having a report for that type of thing, similar to the boilerplate audit report that we have in sets of accounts.
I think just to add to that, it has the potential to expand the level of interest in our sector as well for up and coming people who want to develop a career in our sector. It's not just about the numbers, it's about the words as well.
We've got 3 questions, one here, one there, one here, just to start with. So.
Yeah, thanks. Just to maybe a question that follows on from that previous one. I've used the word integrated, not because I'm referring to integrated reporting or anything like that, but to the extent to which these issues are fundamentally integrated and not something which is separate and connected. So to what extent do we need to have an understanding global climate change when you're trying to figure out whether oil is a stranded asset on balance sheet or the fundamental impact of climate change on any member of assets. So is there a sense in which we need to see these things as much more integrated rather than separate things?
Do you want to answer that now?
I think we just agree.
Yeah, well, I agree. I think that it's that fundamental concept, isn't it, that you can't do a good audit if you don't understand your client's business. And if those things are fundamental to your client's business, you need to understand them, and they will be for most businesses. So I think, yeah.
Are there regulatory restrictions, and in a sense, you know, when we talk about the game changes, one of which is the separation of the audit, are those going to create problems for the audit side in terms of its development in those things?
I don't think they need to create problems. They could do, because it's sort of where you define things. But I think your point about integration, you cannot audit without having an understanding of climate change and the impacts. As you say, you won't be able to do your impairment reviews properly because you won't have worked out whether an asset is stranded or whether the depreciation rate needs to, you know, dramatically reduce. So you can't do an audit without taking that into account. And then I think, you know, there is a separate thing in terms of, you know, the separation. A lot of strategic advice that can be given, which would need to be separated off and be dealt with differently. But I mean, we've had that before. We've had it with tax. You need to talk to each other. You need some of the experts in your audit team, and you need others who concentrate on the strategic side of things.
Take these 2 questions together, maybe.
Yeah, I suppose 2 questions really. As you said, you know, that over the last 30, 40 years, the level of reporting has grown exponentially, and it's still not prevented some of the scandals that we've seen over that period, and particularly over the last couple of years. And the fundamental question to me is, how do you deal with the inherent conflict of auditors being appointed by a board? And that is a key question, because in my experience, where auditors have flip-flopped over really important issues, it's because they've been too in awe of their employers. And the ancillary question, and I think it goes back to what the Lord said, is that generating
Which Lord?
The one that disappeared. The idea of generating competition for audits is all well and good theoretically. Again, my experience is that firms have actually refused to pitch for audits on the basis that it is so costly to do so. And in actual fact, the choice then for a board in trying to find another auditor is very, very limited indeed. And in fact, a partner of one firm, and this was borne out by my own experience, actually said to me that the cost of pitching on this particular audit that I was involved with was nearly £500,000. And that was something that they would not in future stomach, having lost the pitch.
Do you want to ask your question as well?
Really interesting question, because on the same vein, Mark Blake, I'm a chartered accountant, chief accountant for top 50 law firm. And it was interesting that Miranda spoke about competition, Lord Callahan spoke about challenges. Julia, you spoke about choice in the market. And my experience as a buyer of audit services is actually choice has been reduced. we're not seeing people come into the audit profession. My son's a chartered accountant. He left audit to go and work in the city. Well, I don't know. My son-in-law is an RI, but his firm is finding it difficult to actually recruit into audit. And my concern is when we talk about regulations, some of course including corporate governance, all of these things are good to have. But what are these regulations and the changes the government bring in? What are they actually going to do in practice to improve competition and encourage firms to make the kind of investment that you're talking about? Because at the moment, I don't see that happening. All I see is a reduction in choice and firms actually declining to even quote if they consider the potentially risky that is walking away, and that cannot be good for the UK economy.
I'm doing the most nodding, I think that's so the sector that I work in, the social housing sector particularly, which is where the public interest entities are that I audit and my firm audits. The audit market there, I would go as far as saying it's broken, really. They rarely can get 3 firms interested. There are maybe 5 firms with the necessary expertise, and normally 2 of them are conflicted out because one does the tax, one does internal audit. So you're down to 3 before you even start, if you want a firm that has got those skills. There's a lot going on by the trade body to try and encourage other auditors into that sector. Often housing associations will get no tenders and they'll have to go through the process again. And actually, for many firms of my size, being in the PI regime is not attractive. So I'm interested in what is happening to encourage firms into the sector, not because I personally want more competition, but actually it's not working. Yeah, people don't want to be in that PI regime if they're not in it already. And I think just to go in it for 1 or 2 clients, which has to be the starting point, I can't see how that's going to improve competition.
Hopefully those questions will go back to the client. I think it's a shame actually we left early because we will get to.
I think the advantage of that is that we can be more forthright in our comments now, and we will write a strongly worded note back to them in due course.
I think one of the things, because obviously we're looking for questions, but I think we're also looking for reflections and you know, representations of what the situation feels like on the ground. And then addition to that is the type of responses that people are looking for. Aside from saying, well, this won't work, what are the proposals, the suggestions that people have? I think one issue that does seem to be coming through is the extent to which firms can start to develop on niche, you know, sort of fields of activity that they're doing, even within the audit arena. So we've seen in the last few weeks, you know, accounting firms getting recognised as B Corps and moving more, you know, into the ESG arena in a pretty explicit fashion. So I don't know whether we had a question from over here at the back, and question here and a question there. So if we just take the 3 questions together, well, and one there, and let's just see where that takes us.
Well, the government seems to be talking about enhancing competition in the market and also improving quality without necessarily making connection between these 2 elements. So, for example, if you look at the evidence, nothing suggests that managed joint audits or shared audits would improve quality. So, as a profession, are you a bit concerned about this lack of evidence-based decision making?
Okay, a question from Ian.
I was interested in the tension between Julia's comment earlier that people decline to audit clients with poor internal controls, and we're actively seeing that in our portfolio. If we deal with a client who is unreliable, that's a lot of problems for them, can't give us the information, my firm would go, we don't want to deal with you. First of all, your fee goes up lots, and then after your fees go up lots, you still not approved, then we can find work elsewhere. So there's a tension between that and this stated incentive of what we need to do is increase competition, because actually that policy only works at a time when there isn't that much competition. Because if you're desperate for work, you work with people who have rubbish controls. 30 years in the profession, I've never seen anything like the world where you go, no, we're not working with you, or we're not working with you, well, we're not working with you, well, you maybe. It's an astonishing world. It's coming out of that lack of competition, that desperate need for resource. It might be driving quality, although the lack of resource is good, but I'm not sure it's good for the economy, because there are good businesses with poor controls that can't be audited. We're trying to do on the profession. I don't think it's necessarily serving particularly the smaller and more struggling businesses, because they say, oh, the price is rocketing, no improvement in competition. Yeah, sorry.
Yeah, no,
it's a speech, not a question.
Is your comment related to these points, or should we deal with quite?
It's about resource, it's about that lack of resource. So my name's Jenny Rose, and I ICEAW member, and I former trained as an auditor, and now I'm a senior lecturer here at the University of Manchester, and I teach hundreds of students in accounting and audit. And I'm concerned about the attractiveness of the profession. So when I trained as an auditor, I was really proud to be an auditor. I'm still proud to be an ICEAW member, but many of the students teach just have no interest in this whole sector of accounting and audit. And unless we're getting the brightest and best minds into the profession, then that's the sustainable futures up there. So I suppose my question was, in an ideal world where you could have whatever you want, what would you do to make that profession more attractive to these students that I'm teaching that to the future of the profession?
Okay. I was going to pick up. Can I pick up on a few of those things, because we've got some hanging points as well. In terms of the attractiveness of the profession, I think ICEAW has a role specifically, and we are looking at the messaging that you could get out, because those of us that are inside, if you like, we can see the value that audit has, how vital it is for economies, and the wider assurance, things like the sustainability, which will appeal to other people that might not be quite so interested in the more sort of numbers-based bits of financial reports. So I think, you know, there's a role for ICEAW, and we are looking at that very, very carefully at the moment as to how do we get that message out? How do we promote this attractiveness of audit? So I think that is core. And I'd like to go back to the point, not with an answer, I hesitate to say, inherent conflict of auditors being appointed by the board. It is a huge inherent conflict. I think they talked about agency theory or something like that when I was at university. And none of these proposals deal with that. All we can do is continue, if you like, to patch the problem without legislation saying, okay, there's going to be a separate body that appoints the auditor or whatever. And I think the separation that is being is already in place in the Big Four. The separation is part of trying to address that. It doesn't get the whole way there, but some of it can be mindset, because if you can get across to the whole of the audit teams, that actually it's vital that you are skeptical and that you hold your ground, regardless of the fact that you might lose a client. And at the moment, it's probably easier than at other times for the points that David mentioned. But you know, it's a balance. You've got to have it in your head, because, as you say, in terms of the way that it's structured, it isn't there.
Just picking up on your point, because actually I think it links to what Julia's just said. I think almost the separation of audit firms, why there might be other benefits, clearly, actually it makes it less attractive, because auditing as a profession, dare I say, no, not me, might be even less appealing than accounting and auditing as a profession, or tax, payroll, auditing, accounting as a profession. So the separation of audit firms, I think that narrowness now of becoming an auditor, which is where the majority of chartered accountants will do their training, I don't think that's helping. Clearly, I think they should all train with a smaller firm like ours, where they get that wider experience. And there is an element of truth that I train with EY, so that's probably unfair. I don't think that's helping. We're doing all sorts of things to try. I have to say, we don't have an issue attracting people that we come across. An example of one I appreciate. We don't have trouble recruiting graduates. We find that relatively easy. Once they've qualified, they don't want to stay in audit. So we can get them in, but we can't keep them. And I think
that's always been the case. It's quite often been perceived that audit as a stepping stone, because you want to move into industry, or you want to become a corporate finance advisor, or all these other careers that seem more attractive than audit, and it's getting polarizing even more now. And I think if there is a separation of audit from other consultancy practices or other areas of audit and accountancy that can provide that level of interest, I think it'll lessen the problem rather than improve it.
Thank you, question.
Yeah.
It would also be great if we could get a question. Yes.
Speaking, so I thought.
It'd also be great if we get a question for one of the students in the room as well. I know we've had some doctoral students, but any undergraduate students who are here?
Are you an undergraduate?
No,
You're looking good though.
ex-PwC and recovering auditor. I don't know if this is a question, but for an observation really. The legislative changes, I hear a lot of talk about internal controls. And that always makes me freeze a little bit because of the fact that my background in audit of financial services. And if you look at the corporate failures and see as audit failures, which I take the point are corporate failures that then reflect unfairly on us, they're almost never, you know, like Patisserie Valerie wasn't the fact that somebody managed to steal an industrial quantity of sandwiches. You know, it's always from the top down. They're always failures of business plan integrity. That's what, you know, comes to. And, you know, so when we talk, it's true that, you know, from the fraud standard, talks I teach auditing now, so ICEAW 40, really says look at the directors first, but the person most likely to commit a material fraud is the finance director, because that person misstates the accounts. Now, my background in financial services is if you're auditing a bank, you don't ever say anything to the public because you'll start a run on the bank. So the good stuff always happens in the private conversation with the Bank of England. You're required to have, same with insurers and so on. So how do we deal, my question, long intro, but my question is, how do we deal with the tendency of legislators to produce bad legislation like Sarbanes-Oxley, which focuses on the comfort in detail and somehow manages to miss the bigger picture, that is always actually a failure of integrity?
If I can add to that, particularly in a sector where my firm and as well audits and small, medium-sized enterprises where that level of internal control and internal control environment is not going to be as robust as a complex multi-international organization. And so it does go to the core of the set of the directors, the leadership team, and not necessarily about ticking the bank rec 25 times. It's not necessarily going to help.
Well, I mean, I think it's just incredibly difficult, as you say, because it is about the integrity of that top level of management. And it's the same, in a sense, it's the same as the question there. How do you deal with it when you're appointed, you know, when the auditor is appointed by the directors, but you've got this same issue, the directors are the ones running it. How do you deal with it if they are liars, cheats, fraudsters, whatever? Sadly, human nature is probably not going to change because of new regulation that the FRC that they've puts into place.
I think one thing to pick up with I got from speeches by both Lord Hannan and Miranda Craig was that, you know, that there were evident opportunities for the issue of development promotion. Okay, I know you said game changers, joint audit. We've had a question put out there as how effective that will be, but there was talk about innovation now. And some of the points that we're picking up here, a lot of it, if you talk about integrity and all these other things, it does come down to issues around what you mean by professionalism in some ways. And to what extent, I guess the speakers, you know, beforehand would be thinking, well, come on, we've got a whole host of accounting professionals in the room. What is the profession coming up with? And I just wonder how you see the balance. I mean, I did a quick word search on the white paper. The word regulation appears 700 times in the white paper. The word professionalism appears at 0. There is no reference in the white paper to professionalism. So what's, you know, has the profession lost the balance? Can it get it back? I mean, it was interesting, Miranda said there's work between the FRC and the ICEAW. So where does that balance lie now? I mean, you know, the leading lights of the institutes and things, I mean, where do you see the future in terms of what the profession itself can lead on? Or are those degrees of freedom just inherently reducing? Because the other side of it, is there a limit on how far regulations?
I think there has to be, doesn't it? And I always go back to the fundamental wording in an audit report, which is that it's an opinion. And actually, there, in theory, two firms could audit the same set of accounts. One could come out with a conclusion that in their opinion it's a true and fair view, another firm might disagree. And I think we've lost that fundamental idea that we are professional and we should, with the right CPD and the right training, we should be able to form reasonable judgments, just as we expect our clients to do in their sets of accounts. So I think that professionalism continues to be important. And it's interesting that a lot of the conversation at the moment is about the lack of public trust, not just in big companies, but in auditors as well. And I think as someone on the other side of that regulation, it feels very much like our regulators don't trust us. So the trust thing, I think, is an issue in lots of different directions.
Yeah, I was just going to pick up because I think it's a really interesting point, and this focus on if actually everybody involved in this thing, you know, was professional in their attitude, was skeptical, because that's part of being professional. The ethics that, you know, ICEAW has essentially says that, you know, we need to make sure that we're competent to do the job, that we have integrity, you know, and so on. I'm not going to go through the whole ethics lecture just now. You'll be very relieved to hear. But, you know, do we need to reinforce that? For instance, you know, CPD has always been required, but do we need to start saying, actually, ethics, you know, remind yourself every year that these are the fundamental ethical requirements? Because sometimes when we look at these, they are failures of ethics, if you put it, you know, very broadly. And does reminding people make a difference? Maybe we don't quite know yet, but it's something that perhaps, you know, you need to start to look at and at least shout about, and maybe you get a little bit of nudge theory and maybe people get better.
And can I just make an observation, which is that, and you saw it with Carillion, where, you know, the auditors get drawn in, where, you know, year one, let's say, Carillion and its board decide that they're going to use some provisions in their contracts to basically boost profitability. Year two, it happens again. Year three, it's worse, and so on. And, you know, nobody, and it was KPMG who were the auditors, nobody at KPMG stood up and said, hey, what's going on here is manipulation of the accounts, and we're off. Unless this changes, we're off. That didn't happen.
We had a question from the audience, which might develop that in a more.
We're into drinking time.
I realise. I'm just looking to see if there's a question from one of the students. I mean, just so you also practice side of the profession, do realise, I mean, when we're teaching auditing and accounting, we do stress how, you know, incredibly exciting time it is. I mean, there's so much going on. There's so many things taking place. There's so many different lines of perspectives and arguments you can promote. So it's not, ironically, auditing isn't boring, you know. Just
sorry, can I ask a question? Because you've just touched on the bit I want to ask. So I am an ex-auditor at KPMG, and I've only come into academia in the last 3 years. What is interesting is I'm currently teaching students on audit who have had some practical exposure working with PwC. And just from talking to these students, what's interesting, we are hearing so much about how we need in higher education to consider more, you know, technology and digital skills within our curriculum. But when I asked around the room how many students actually had exposure using automated ways of auditing, I had 0 who actually had that experience. They're all still very much using manual ways of doing their audit. And the feedback, surprisingly, is that students are finding it such a mundane, boring task, and I don't blame them. So I think my question is, there seems to be a lot that we're hearing around moving more towards embedding technology in the way we should be auditing and all of that, but we don't quite see that being mirrored in the real world, at least in terms of experience. And so I'm just trying to understand, how are we then expected to get these students upskilled with these skills, you know, these digital areas, and get them sort of more motivated
I mean, I think it's nearly there. So in lots of firms, there will be a lot of digital auditing going on, but it might be in particular departments. So they might have people who specialise in that, and therefore it's a team that gets brought in. The Institute has invested in a company called Engine B, which is developing a common data platform for audit, which will allow easier transition of data into a data analytics tool, which will mean that, I mean, the Big Four can do this anyway, but it will mean that any sort of size firm would be able to get data easily into data analytics tool. Data analytics is one of the most powerful ways for it to audit using technology. But one of the big barriers has been it takes so long to try and make sure that you've got all the data from the company system onto something that you can do anything with, that you end up ticking and bashing in an old way. But it's getting there. I take your point there. I mean, you are right.
Data analytics has been talked about in audits for 25, 30, 35 years, perhaps.
It's in the exam.
There's a lot of investment involved in order to get to that stage where you can trust the data and you can use the tools to spit out the right information, to the extent where, in many cases, particularly for small, medium-sized enterprises, which is the sector that we look in, which is non-PI, it's just quicker and more efficient.
But I think that won't be the case for much longer. I think we're nearly there.
Right. But you're back to the problem that auditing failures tend to be integrity failures at the top. But you can crunch the data and the depth of the local ledger all you bloody like. But if the finance director is bypassing it at the top, it's really difficult to design the data analytics to find.
I think you're right. However, I think it will help if you've got that 100% population analysis. Then the outliers will stand out and you should be able to pick up on a high level failure much more easily. It may still happen because the tone is set at the top. I think still be wrong.
I think we probably need to draw it to a close. And just in doing that, we have one question from the online audience, which I'll not ask as a question, but more of the thought to take away with you. It's from Chris Basker, who's a colleague of Rod and myself, but he just asked the question, how do we make auditing a more positive and progressive force for good? So, if you take that thought away with you, because it's very interesting, one of the phrases that I have always detested about auditing is the phrase, an audit is an audit is an audit, because it seems to be the most anti-innovative phrase in auditing, that all audits are all the same, and that's the way they function. So, and you do see a number of the regional firms now, particularly in the SME sector, promoting that their audits are distinctive, that they, in many ways, they're looking in the build back better regime of building better futures for businesses. Now, obviously, those audits may well not be statutory audits, and they may well also be highly stylized. But I think that final question about, as a profession, what can we do to make auditing a more positive and progressive force for good in a variety of ways, whether it's ethics, whether it's scope and purpose of auditing, and a whole host of issues. I think it's a very nice thought to go away with. So I just would like to say thanks very much for being speaking panelists, and also very special thanks to Rod and to Michael, because I know since their appointments in the regional society position, they've been very active in trying to get something like this event together, and we've been delighted. And thanks also to the staff at AMBS for helping to host this. And it's been great to see people from all sorts of aspects of the profession here, and very much look forward to doing other events, like you said, as an annual event or whatever. Rod did mention golf, but those games will be very few and far between, because if you actually get a chance to chat with Rod, he has an exceedingly high handicap. Yeah. It's not worth playing with it.
I do win sometimes. But thank you very much for coming. But seriously, if anyone has any comments, please drop a line. Probably the best way is to Claire Parisi, you've seen the name. Any comments, especially on that last question, just send them in and we will then put something together over the next 2 or 3 weeks to send back to the Minister